Do you want to know how to make six figures on a deal with no money down and pay retail when you do it? Stick around here on Note School TV as we dig into that today. So we're back, Note School TV, every single Wednesday. Make sure that you are joining us. We've got some of the greatest content. We've got some really cool people joining us today. But here's the first thing I want to ask. If this is good content for you, if this is relevant content for you, you're liking what we're doing, man, please like these videos. Share them with your friends. But more importantly, subscribe to this channel so that you are able to consistently get this coming through your feed, right? And make sure you're clicking that notification bell so that when we do go live, like we are right now, you're getting notified. You can jump on and you can start to communicate with us. Bring your thoughts, bring your questions, bring your virtual high five, so to speak, and we'll go from there. If you are new to kind of our channel or new to what we're talking about, and you just want to learn a little bit more about what is Note School, what is this thing, and what are notes, you can go to noteschool.com/TV and you can learn a little bit more about what Note School is and kind of what we're teaching, to see if it's something you need to be adding into your business and really considering. Today we have some really cool stuff. We have a very special guest on. Actually, we got a full house today, and so I'm going to bring on some people that I think are going to be pretty fascinating for you, and including one of our students. And so Joe Varnador is with us today, somewhere out there in the virtual world. Joe, you want to pop on? And we have Eddie Speed as well. So we got some pretty serious veterans with us. And then you'll see this handsome man up in the corner, the bearded wonder, Seth Choate. He is a Note School student, and we're going to dig into a deal that just a Note School student did that you could be replicating in your business. And so, Joe, why don't you? I'll kind of hand it over to you for a second, and you kind of kick us off.
Sounds good. So I like the way that Scott had arranged that. Old guy, young guy, old guy there, right? So, hey, everybody. Thanks for being here today with us on Note School TV. And we have a very special guest, one of our students from California, Mr. Seth Choate. And Seth is he's a high volume real estate investor, right? That focused his business for many years on the wholesale part of the business. And about a year and a half ago, he decided that Note School was the next step in the growth of his business and his wealth building capabilities. So he joined us, and it has been nothing but just taking it straight up and not only making money now, but money over time and money tomorrow. So Seth, how are you today?
Doing great, Joe. Doing great. Thanks for having me. How are you doing?
I'm doing very well. Hey, Eddie.
Hey, how got you guys?
You are wonderful. So, Seth, so a little bit about your background there. You were for many years just you did wholesale deals, right?
Yeah, that was the primary focus. Was just buy low, sell high to investors. And we built a pretty successful business doing that. We still do that today. About a year and a half ago, when we ran into you guys and found the opportunity, we decided to add creative finance and notes to our business and buying on terms.
Well, and that just made sense because what you were really focused on, I mean, you're getting older now, right? So you decided building wealth along with making an income today, but then building wealth into the future. And your business was changing as well, right? You have a lot of leads. You have maybe 20 leads come in and you're popping one of those or two of those, but you're leaving 18 or 19 of those behind. And that was one of the challenges you were facing, right?
That's exactly right. I mean, one of the frustrations that I had was we had a very successful business, but we're still striking out 95% of the time. And I'm sitting there going, how can we make money on these leads? These are opportunities. These are sellers who have raised their hands wanting to sell. We've got to improve our skill set to one, help them get out of the deal, and then make more opportunities for us. So that's the main reason.
Right. So, Seth, let's talk about a deal there. And Eddie, any interjection you want to make? Just jump right in, of course. So, Seth, you found a deal there, and it was in Modesto, correct?
Close to Modesto, very close. Oakdale.
Oakdale. Very good. Well, I was going to get it right eventually, right? So you found a deal there, and it was one that you had marketed to, and this one was one you really needed to do, and you realized you could do it as a creative finance deal. So you negotiated with the seller, and you paid $265,000 for this place, right?
Yes. And, this was a long, several conversations with this seller. We had talked for a long amount of time, and initially we went at her with the cash offer, but I was about 180,000 is where I was. So we were way off, but there was motivation. She wanted to sell. And so over time we came back to the table, and the purchase price was 265, but there's a lot of layers to this with the terms and everything that make it attractive.
Right. Well, and because you were able to pay her. And the reason you were able to pay her more than the 180 that you would have paid as a wholesale deal is because you were going to pay her equity over time, right?
Correct. There's no way we could have done this from a cash standpoint at 260. Right. That's full market pretty much.
Right.
So this is something that I think I see a lot of in the marketplace is obviously the seller is either stuck on price because they need that price or they just want that price, right? Like they're up here and this is that retail range, right? And you know that there's not much you can do with that as a wholesaler. And we're down here because we have to have the margin in the deal. And so I think this is something that everybody can relate to if you're talking to sellers, because you're not going to close every single deal. And what you do with all these leads, like Seth was saying, he's spending hard-earned money on leads, getting them, and then basically putting them in his trash can.
That's exactly right. And, you get these folks that their neighbor told them it's worth this, or they saw it on Zillow or something. So they're just stuck on that number. But you can hear the motivation and you hear their why and you understand these things. So as you start to understand, all right, I'll give you this price, but you've got to cut it up a few different ways on the terms. You can make it work where you give them their number and make them happy and give them what they want. But there's some advantages for you along the way and on the back end.
So Joe, why don't you walk us through here then the kind of the points of this deal, because one of the most powerful statements I've ever heard Eddie say, and I might have even said it on this show, is it's not about the price you pay, it's when you pay the price. And so with Seth paying this higher price, walk us through some of the deal points so we can kind of start to better understand.
Yeah. So Seth, you got it for 265. That was her number. And she was stuck on that number, and she was also stuck on, she wanted $1,500 a month as far as a payment, right? She was okay with seller financing. She was okay with you paying it over time, but she wanted the 265 and she wanted the 1,500. And basically, we talked about this on a deal lab and figured out, hey, you can do exactly that, right?
Yeah, that's so actually those were her initial terms, and I was fighting back with her for weeks wanting 1,300 and 3%.
Right.
And I'm just fighting. And I'm like, I didn't want to pay 1,500. And then I brought it onto the call with you guys, and you're like, Seth, give her 1,500 and go principal only. And I'm like, bingo, went off in my head. And so she was just stuck on payment. And so instead of 1,300, 3%, we went 1,500, 0%. And I think I saved about $200,000.
Yes, you did, in interest.
That's a great point, Seth. And we see that a lot, right? We know that when you buy it, you're going to resell it and sell it on a wraparound mortgage, and you're going to collect a bigger payment from who's paying you than the payment you're making, right? So you were worried about cash flow. And the seller was worried about cash flow, but here's what we've seen over and over and over. They give up everything if they get the one little thing they want. She gave up her interest if she could just get $200 more a month in payment. Isn't that crazy?
Yes. And one of the things after we signed all this and got all this done, she's older. She goes, Seth, I don't care about the back half of this thing. She goes, I needed $1,500 a month now. And a light bulb went off in my head. The interest was irrelevant to her. It was what she needed for the next 5, 6, 7 years of her life that were important.
Right. And, that's the way it often is. And Seth, we call that the talk off, right? I mean, you said it, right? You talked to her over several conversations. It wasn't, well, I can't, you won't sell it to me for 180. Well, it's pivot, right? That's the, one of the buzzwords for 2020, right? So you pivoted and you bought it. And then once you had that, she got what she wanted. Then you used, basically Facebook Marketplace and said, hey, private loan, available to a well-qualified buyer with a large down payment, and you found your buyer, right?
Yep, we ended up selling this place for $295 and got $25,000 down,
right,
as a down payment, and I believe it's $2,100 a month. We're netting about $7,200 a year right now.
Right. So Seth, let's talk about that a second. So she didn't care about the down payment; she cared about the $1,500 a month. So you sell it for $295,
yep,
with $25,000 down. So you had $25,000 in today money, right?
Yep.
And then you had a cash flow of $600 a month for 15 years.
Yes.
Right. So that's $7,200 a year. And then at the end of 15 years, you did it with you set your terms up when you bought it. At 15 years, it had to all pay off at the end of 15 years. And actually the loan paid off in about 13 years, your underlying loan. But then at the end of 15 years, you then received a lump sum of cash because your buyer's loan ballooned, it all came due, and you made another $211,000.
Yep. It's awesome. I'm very excited for that.
When you can tell you're really excited. That I do. It's $25 today, $600 a month for 15 years, and boom, I get $211,000, right?
Yeah.
All on a deal that you paid retail for.
Full market.
You would have offered $80,000 less on a wholesale deal, and you would have probably made a $25,000 flip.
Maybe, probably less than that. And that's the crazy thing: pay full market and make way more
profit today. You made more profit today when you resold it from the down payment money.
Correct.
When you would have made wholesaling the deal. Well, how come they don't do a TV show called "Buy This House for Retail"?
It's a little.
Well, they do. It's called the Dope School TV show.
There you go. Oh, that's right. Yeah. Yeah. So Seth, at the end of the day, and this is over time, but you're making what, $344,644 on a deal that, again, it would have never been made as a wholesale deal.
Yeah, no. And it's just cash
Seth
flow.
and I have a lot of mutual friends. I tell people, I said, Seth thinks like an old man, right? I said, because he came into this, thinking like a young man. Like he and I met about 2 years ago, and he came to a class, but he said, look, I understand I need to be building wealth. I don't need to just make transactional money and stuff. It's cool that you buy 200 houses a year. And he did, and he still does, but he just realized that he could make. I have seen a number of case studies, Seth, that you made north of total money on the deal, north of $250,000. Not one deal, a number of case studies. I know because I've taught some of those case studies. And this is another one where you just went in there, and I remember you bringing it to the table and you said, look, I'm paying retail. The house, in this case, people ask these questions, Seth. Have you ever had to fix up a house that you bought on terms?
Yes.
But you didn't have to fix this one.
This one I sold. Here's the best part about this one that got me so excited. The last few months, $2,100 just keeps hitting my bank account, and they're putting a roof on it right now. If that was a rental property, I would not be getting $2,100 a month in my bank account. But they have to pay me because I'm the bank.
And then you pay the underlying mortgage of the $1,500.
Mm-hmm.
So you're making $600 net income every month.
A true net number.
So you bought it with nothing down.
Mhm.
You sold it with 25,000 down, which means that you took home the 25 grand because you didn't have any money invested when you bought it.
Correct.
Then you sold it on this wraparound transaction. It's kind of like a lease, a master lease on an Airbnb, right? You're collecting more money every month than you owe on your underlying, right? And
Yeah.
so it's a wraparound. And so I wanted to talk about, like, who is this buyer, Seth? Like, what makes you comfortable that they're going to pay you?
Sure. So when we put this out for marketing, we actually had a very significant amount of interest. And these folks, this was a very nice family. This guy has a contracting business. He's in construction and he's crushing it. The one problem he has is that he doesn't have a social security number. He's an I-10 borrower. Right. And in traditional lending, he can't get traditional lending. So the only way he could buy a home was go get a awful hard money loan from somebody that's just terrible, or I have financing for him. And that was where he came and played. The guy makes excellent income. He's been doing this for quite some time, literally a great borrower, but just because he doesn't have a social security number, he can't buy a home from traditional lending institutions.
And Seth, right now with this mortgage credit availability, right, down so much, even if he had a social security number, that being self-employed, this is exactly one of the targets they've gone after, that they're not making loans for. So think of it in terms of this, Seth, you gave home ownership to a deserving family because of your ability to structure creative financing.
Yes. And we text back and forth. I ask them how the house is going. Like, it's created a relationship. That's one of the things I've realized is, like, I create a relationship I still talk to the lender on the phone all the time. Her and I chat. And then now I talk with the people I'm lending to. So I've helped two different people, two different groups through this process. And it's pretty cool.
And Seth, the other thing that really strikes me about this is that this gentleman that you sold it to, that is your just miss buyer, he has a circle of friends. He's a contractor, right? So he has a circle of friends that are going to be just miss buyers as well.
I have a line of buyers. Like, I just don't have enough houses yet. I got to go get some more because they're ready. Like, they were mad he got the deal and not them. So
right. And it just reminds me of something, and Eddie, I'll share this with the young guys here, is that, the guy told me that was the bearded professor when I started back in early 1990. He said, Joe, just remember, money has an end, but cash flow is continuous. So that's always been my mantra with the note business.
All right. So you do another crazy deal where you make some upfront money. You make $600 a month cash flow, and nobody gets wealthy on $600 a month cash flow, but they get wealthy on 50 deals times $600, right? And all this future money, because the underlying mortgage, because you're paying no interest. The $1,500 is going straight to the principal, so it pays out in like 13 years, and then the wrap mortgage you're receiving payments on, it's a 30-year amortization, but it has a balloon due in 15 years. And by the way, that is compliant with Dodd-Frank. Right. So at the end of 15 years, after you've gotten all this $600 a month for 13 years, and then it gets $2,100 a month for another couple of years, then all of a sudden, bonanza, you get a $200,000 balloon payment due you. Seth, I was doing the math. I'm going to be 61 years old at the end of this month. And I was thinking in 15 years, I'm going to be about 75. And I was wondering where you're going to send me on vacation when you get that balloon. Brian, would you mark that in your calendar?
You got it. Oh, man. The goal with these is, like you said, get 50 of them, because if you can get 3-4 payoffs a year, It's just 200 grand, 200 grand, 200. I mean, that's pretty awesome. And it's that delayed gratification, but you get upfront money now too. It's cool.
Yeah.
All right. I want to go back down memory lane with you. Okay. So we have introduced this concept on Note School TV. Brian teaches about it all the time to people at real estate investor groups and real estate audiences. Obviously, Joe and I get real involved in teaching in advanced classes. That you've done all that with us. But here's the idea. The idea is, how did you start? And what was going through your head when you started? Like you saw me speak at an event, right? And you said, okay, I'm going to buy Note School training. It's a class and it's got some home study stuff. And you went and came to that class. I remember it was in Sacramento, California.
Mm-hmm.
And you sat on the front row on the left side.
Yes.
Speaker left, they call it.
Yep.
Right?
Yep.
And so all that's really cool. But the reality is, you had to go home and say, how am I going to work this into my business? Right. So
Yeah.
what were those steps? What was your mindset? You said, I'm not giving up anything in my wholesaling business. If I can buy low, sell high, and make profit, I'm going to do it. Right. So you were just walking your trash can lead. So what was your mindset when you started that?
When we sat through that class, there was the upside is tremendous in this. Now, it takes a minute to learn it. So, but putting this into your business, not having to spend any more money on marketing, I knew if I could immerse myself in the 3 courses a week and then take there's so many online tutorials through the program that you can go through. I think I spend in the beginning, it was about 6 hours a week inside of the Note School platform through all the different things that are offered. And I started immersing myself in this every week, showing up on the calls. And then I bring something onto the call, because to me, I learn best by doing. And when you're invested in it, you're going to learn a lot more. And so, but I had to immerse because I saw the upside in, I can't find another opportunity where I can just pay full price for something to make 200 grand, like 300 grand. The wealth that it builds along the way was too good to pass up. So I had to figure this out. And it's about 6 hours a week.
Seth, if you could take a timeline of somebody from 30 years ago and show them an iPhone 12 today, they couldn't wrap their mind around it, right? They couldn't wrap their mind around it. Because 30 years ago, I was in business 30 years ago. I don't know where you were, but you weren't in business, right?
So 1 year old.
Okay, well, that's about what I was thinking. So the point is now you have all of these things on an iPhone that would have been in a computer as big as this room, okay? So we don't know what we don't know until we see it. And once we see it, it makes sense. Mm-hmm. So we figured this out a long time ago, right? The only way you really can teach this ultimately is with case studies. But here's the thing about it. You were frustrated with the success of your marketing, right? When I met you, you said my marketing dollars are becoming less effective. I'm making less profit for the dollar I'm having to spend marketing. And that's because apparently everybody in the whole United States found out about flipping houses and they all tried it.
Yeah. Right? That's the competition got crazy.
And so this just became a way to dig through the trash can and go do it. And once again, once people start doing it, and that's why I laughed and said, you think like an old man, Seth, because the truth of the matter is you really, really, really have adopted this as to understand what wealth is. We're not robbing you from transactional income. You're just allowing us to show you some paths so that you're a young, smart guy at 31 years old, okay? But let me just tell you something. This will be good to you for the rest of your life.
Absolutely.
I love that. And I think something that's really important to point out here too is Seth's not giving up his transactional income from his wholesale business, right? He's still wholesaling deals. And if you want to wholesale deals, you can continue to do that. But there's going to be 10, 15, 20, 30 people that don't agree with you on price. And the whole point is Seth has figured out how to take all of those leads and turn them into bigger profit today, as well as bonus income over the future. And he's figured out how to start creating his own notes, really making his own bank. And that's, I think, what's so powerful about this. So I'll kind of put a bow on this by saying, if you're kind of in that spot, you're wanting to learn a little bit more about how can I do this like Seth? How can I start paying retail for houses, putting no money down, making 6 figures all on a deal that I wasn't going to get anyway as a wholesaler? Man, go to noteschool.com/TV. Get engaged, start subscribing to some of the content, start creating your own notes. And if you want to learn more about the note business, we've got a whole other channel here on the Note School YouTube channel that you could check out called Feeding Frenzy Friday. In fact, just last Friday, we put out a note that the borrower's been there from 2011. It's got a 10% interest rate. It's got, I mean, so many good things. 20 years left to pay off, a 40% investment to value, which is going to lower your risk. My point is this: come check out those videos. Come check out that part of the channel. You'll start to see what it looks like to be in the note business and kind of figure out, man, there's a huge opportunity for building wealth here as well. And so there's a lot of ways to get involved. I really want to encourage you to do it. And if nothing else, just like the video, subscribe to the channel. It means a lot to us. Turn on the notifications, especially so that you can start to engage with us here on the channel during these live streams. I don't know if there's any questions that have come in. I saw some things pop up a second ago, but I want to just encourage you guys to come in and get involved. And if there's no other questions, man, we'll always see you next week.
Seth, you're awesome.
Thanks so much, Seth.
Take care of the fam, man. Keep safe.
Thank you.
All right, we'll see y'all next week on Note School TV.